If you are anything like me, you're probably an average person with a reasonable degree of intelligence. You're not a genius, but you're certainly not an idiot. You're somewhere in the middle, and you're trying to do things to make your life better. So you came across trading, and you look at all this shit online, and you see everybody flexing their Lamborghinis, their mansions, their private jets, millions of dollars, and you think to yourself, you know what, that's great, but I'd be happy personally just to make enough to pay for my bills, take care of my kids and family, go on a couple vacations a year, and not have to go to my job, which maybe I don't really like all the way. I'd rather just be trading a couple hours a day, and then I could do that, make plenty of money, and not have to worry about it. The average retail trader, depending on what metrics you look at, makes around 100,000 to 200,000 US dollars per year, the profitable ones. Only a small number of people get profitable. There's a caveat here. Trading is really fucking hard. It's one of the hardest things that you could possibly do in terms of being an entrepreneur, because there are no ground rules. Whenever you're trading and you're looking at charts, anything goes. Your reasons for entering a trade are arbitrary and random, and there are no guidelines. There are no rules. There is no nothing. You're free to do whatever the hell you want. And that can be damning to a lot of people. So in this video, I'm going to tell you the cold hard truth. It is probably going to make some people upset, but I do believe I have a moral obligation as a person who shares everything about my trading journey online to tell you what I believe the reality is, and also to tell you what I believe the best way it is to actually get profitable. Most of you watching this video will not get profitable. It's terrible. It's sad. It's very unfortunate. I'm speaking to those of you who are not going to give up, and I'm speaking to those of you who are going to continue to try to do this until it works. My plan A, back when I started trading in 2016, was to learn trading and get profitable. My plan B was to try plan A again in a different way until I got profitable. I didn't have a plan B. I wanted to learn trading and get there, or be found dead on the side of the road that leads to the top of the mountain of proverbial profitability. I didn't take no for an answer. I said I was going to stick with it regardless. If that's you, I'm talking to you. If that's not you, it's time for you to leave this video. You're probably not going to get profitable trading. Just being real with you. So I'm going to first break down a few ground rules here, a couple basic guidelines that I'm going to go over. First things first, you have to accept the level of uncertainty in trading. So the level of uncertainty in trading dictates that when you get to a chart, you have absolutely no clue what's going to happen. You're looking at these charts, there are these candles going up and down, and you try to assign all of these random reasons as to why you think price might go up or down. So you are looking at these candles, you think, okay, it's at a resistance, so I'm going to sell. It breaks the resistance, you get stopped out. You're like, shit. It comes back to test the resistance as support. So you're like, okay, this is a break and retest of a support resistance zone. So then you buy, and then it breaks the support and goes down, and then you lose the trade and everything. So all this happens over and over again, and you end up switching strategies like 15,000 times every single week, and then you ultimately end up making zero progress. First thing is you have to accept this uncertainty. There is so much uncertainty in the market, and trading is by definition gambling. You are placing a wager on an uncertain outcome. That is the whole definition of trading. So here's the little secret here by me getting away at this whole uncertainty in trading thing. The secret here is you just have to make a little bit more money on average when you're right than the amount of money you lose on average when you're wrong. If you're right half the time and wrong half the time, but when you're wrong you lose 40 bucks and when you're right you make 60 bucks, you're profitable. Like these are just simple numbers, right? They're metrics of like your average risk to reward ratio, your average win per trade, your average loss per trade, and your average win rate. If you can just make a little bit more than you lose, you're good. That is why I have preached from the top of the mountaintop this second thing that I'm going to talk about, which is to keep things simple and control risk. Whenever it comes to keeping things simple, my trading approach is so simple that I don't even really have to draw anything on the charts. Whenever it comes to my charts, they're simple, like blank charts with maybe a support or resistance zone on it, and then like an arrow pointing which way I think price is going to go. Keep in mind, I've been doing this profitably for almost 6 years. And I do the absolute bare minimum. It's repeatable, it's duplicatable, it's consistent, it's predictable. I'm able to do this the same thing over and over and over, and then accept whatever the uncertain outcomes are. Meaning, some days I'm going to lose 3 trades in a row, some days I'm going to win 3 trades in a row, some days I'm not going to take any trades at all. It all comes down to the fact that you just got to keep things simple and control risk. This allows you to do the same thing over and over long term. And the third thing I want to talk about is the fact that you have to be able to trade fearlessly. Meaning you have to trade with zero emotion. You might notice if you've been profitable in demo and then tried to switch to a live account of any starting balance, whether it's small, medium, or large based on your income. When you switch to a live account, all of a sudden you introduce this thing called emotions. These emotions, your psychology wavering up and down, your lack of confidence, questioning yourself, and the most detrimental of all, fear. You look at a chart And then what you would normally see as a trade that's perfectly fine to take, if you were trading it like risk-free, say on a demo account, or not even placing the trade at all, and just telling one of your friends, hey, I think it's going to bounce here at the support, you're thinking so clearly. However, whenever it comes to the live capital and you're deciding the risk and you're looking like, wow, this is how much money I could lose in this trade, you end up making weird decisions. You get into a trade, it starts to go sideways, you end up closing, scared, thinking it's not going to work. And then because you closed, not because of any logical, rational reason or experience-based, skill-based reason, but simply for the reason that you got scared and you saw your loss and it was like a $20 loss and you thought it was going to turn into a $50 loss if it hit your stop loss, so you just closed. So you close the trade when it's still at a support level where it's still likely to bounce based on your system, and then price bounces and it goes to your original target and you're sitting there frustrated. And you can't think of a good reason why you closed aside from the fact that you were just legit fearful. Fear is one of the biggest detrimental factors in trading. You have to be able to get to the chart, be delusionally confident, and trade fearlessly while fully accepting the risks and the outcomes, the positives, the negatives, the ups and downs, the roller coaster that is trading. So let's go ahead and get a little bit more into this. I'm going to get on the chart and talk to you a little bit about uncertainty. When you're trading, if you're keeping things very simple, like me, for example, here's my chart for a trade I was looking to take on Friday yesterday. It never set up. It didn't get into the zone, but I was going to sell here. I had my risk structured. I had my profit targets all structured and everything kind of planned out. Whenever it gets to the first part of uncertainty, you have to understand this. When you draw anything on the chart, you're using a moving average, you're using some sort of volume indicator, you're using Fibonacci, whatever. You have to accept, on most cases, if you're targeting an equal 1-to-1 risk reward, you're going to have about a 50% win rate. And then it's even shittier than that if you're targeting like a higher risk reward, like a 1-to-2 or 1-to-3. On the most average level, you're going to have a 50-50 win rate. This means when price gets to a resistance zone and then you sell thinking it's going to bounce, half the time it will bounce, the other half the time it will go up. So it's best to like not even consider the zone you draw to really have that much relevance. Now, some people might say, well, Nick, you use support resistance, so what the hell are you talking about? You're telling me that this is stupid, but you're using it. Here's the benefit behind support resistance. It gives you a way of controlling risk. If you use something like support resistance, right? You can use anything, any stupid thing you can have. We've got all sorts of crazy shit here. The Elliott triple combo waves, the sine line. I mean, we could just throw whatever the hell we want on the chart. None of it has any predictive or speculative it doesn't have any type of predictive efficacy. It's nothing. It's just stupid lines and zones you put in your chart. They only give you a way of controlling risk. It gives you a way of saying when price gets here to this region on the chart, and I enter a trade, say for example, right here. If price breaks past this zone and starts going up, I can close it at a loss. In worst case scenario, it like hits a stop loss, wherever you actually have your stop loss. But in best case scenario, if it starts going towards my target, I can hold on to the trade, maybe even protect the position with a break-even stop loss. And if it goes to the target, I'll have a 1-to-1 risk-reward ratio minimum and hit that and make some profit. So on your average losing trades, maybe you lose about, I don't know, if you're risking $100 at the stop loss, maybe you lose $50 on average. Every now and then you can get out at break-even sometimes you get out at a loss. But on average, let's say you lose $50. But on your average winners, say you make, if you're risking $100 to make $100, your average winners, you make $100, you're making a little bit more than you're losing, even after swaps and commissions and fees that it takes to trade. And it's that simple. It's not like you have to use all this crazy stuff to try to predict where price is going to go. In my opinion, it's a loser's game to try to predict where price is going to go. So then it also takes the stress off your shoulders because you don't even have to worry about getting the support resistance zones right. The stupid arbitrary thing about support and resistance and anything in price indicator is that it's all speculative. Everything is so subjective and speculative. You can draw a support resistance zone here. Meanwhile, one of your friends will say, no, you're doing it wrong. The support resistance zone is actually up here. And then you can have another one of your friends say, no, the support resistance zone is actually right here. That's the zone. Then you're going to have some dude say, no, this is the absolute lowest support resistance zone. Before you know it, you've got 69 different support resistance zones on your chart, and you have no clue what you're doing, and you're just frustrated, and then you really feel like an idiot, even though you probably have at least an average level of intelligence like most people, like myself. I'm no one special. I've just figured out how to do the same simple shit over and over for years, and I just do that, nothing else. I make a handsome profit every year trading, and I have for 5 years in a row. So when it comes to support resistance, what I like to do is just look at where current market price is and draw what I think is the best zone closest to current market price. So in this case, zones where it's so obvious and painful that your dog could look at the chart, your grandma could look at the chart, and everybody could agree, okay, that looks like a zone where prices bounced a couple times. Maybe it'll bounce there again. I don't like using zones like this where you have to put on like some night vision goggles and get a microscope and start finding, okay, well, it bounced there and then it broke there and then it bounced here. Technically, all this shit where it swipes the zone over and over. I don't like using those. I typically prefer to use zones like this just because there's it's so much easier to define the risk. Keep in mind, support resistance is just a way of controlling risk, as is anything with technical analysis. It gives you zero predictive power. It is not a predictive mechanism or speculative mechanism. It is something that just gives you a way of saying, if it gets here and I sell and it bounces, I'll make a profit. But if it starts breaking above, I can close it at a little loss. That's all support resistance does. So don't overthink it when you're drawing your zones. Now, after you draw your zones, you get everything ready, you plan out your trade. Maybe you sell at resistance, buy at support. If you want to follow my trades, click the first link in the description of this video. It's my free Telegram channel. There's over 50,000 members in there. I've been sharing my live trades for the past 5 years since I started teaching trading and Forex, stocks, and crypto. I just shared all for free. It's the first link in the description. You can literally watch me trade every day if you want. That should help you if this video isn't enough. Just click that and join that. But with this being said, you have to accept a degree of uncertainty whenever price is getting to these zones. Meaning when it gets to the zone, there's a 50% chance it'll break the zone and a 50% chance that it'll bounce at the zone. All you're trying to do is, if you're right, hold it to your profit target. And if you're wrong, get out a little bit early. Remember, you are only profitable if you have the bare minimum, if you have the win rate of random chance, which is 50-50. You are only profitable if you make a little bit more than you lose on your winning trades versus what you lose on your losing trades. That's it. So if you sell at a resistance zone and it looks like it's going to bounce, and you take the time to develop the skill set, the intuition necessary to make that kind of like speculative decision in that moment, that subjective discernment of price action to say, okay, I'm going to stay in right here. It looks like it's rejecting. Or you make a decision like, it looks like it's going to break the zone. I'm probably going to close this at break even or a small loss and get out. You could use all that. You'll get better with it, experience over time. Then maybe you'll have a 55 to 60% win rate, or some people have a crazy high win rate. I don't. I'm not much better than random chance, so I have to use risk management to be able to make money. Otherwise, like, I'm a complete idiot. I don't know what the hell I'm doing. If I didn't use risk management, I wouldn't be profitable. And the same will apply to every single person who does not exercise risk management. Because ultimately, nobody has a 100% win rate. Even if you got like a 99% win rate, when you finally lose, it'll be ridiculous. You'll wipe out everything you made. So you must always have risk management. In my very humble opinion, with almost 8 years of trading experience. So with that said, it is uncertain whenever price gets to the zone what will happen. Price will go up or down. All your job is to make a little bit more than you lose. Second thing we'll talk about here is to keep things simple. Keep things simple and control risk. Whenever you're trading, keep in mind price is just going to go up or down. There's not really much to do. Whenever price gets to any zone you could draw on the chart, anything you could make up or conjure up in your head, you could say, all right, price could get to this zone. If it does get to this zone and I buy right here, it has a 50% chance of bouncing and it has a 50% chance of breaking straight through it. So with that taken into account, you've already kept the outcomes pretty simple, because you're like saying, okay, my plan is just to buy here at support. And then if I buy there at support and it immediately starts breaking through it, I'm going to get out of the trade at a small loss. And if it starts bouncing, then I'm just going to hold it to the profit target. So you're keeping things really, really simple. That's the first portion of this second thing. Keeping things simple. The second thing is controlling risk. You're defining your risk. Say you have a $1,000 small account that you start. I don't know if that's big or small for you and your income. I'm just as an example. You start a $1,000 account. Let's say you just want to risk $100 per trade. It's 10% of the account. I'm not going to talk about the percentages here. 10% of $1,000. You could do the same thing, risking like 1% of $10,000. It's all arbitrary. You just decide what dollar amount you're comfortable risking. Since Forex, you can use high leverage and a bunch of degenerate, unregulated brokers. You can just use the high leverage and deposit a really tiny amount and then just risk whatever dollar amount you want. Just because you have 100K to trade with doesn't mean you have to put 100K into the account. You can put like 1 or 2K and play around with it. You don't have to put this whole thing of putting $100,000 and risking 0.5% per trade. I'm like, dude, like, you're risking like $500. So if you want to do that, put 10K into an account and just still risk $500. Who gives a shit if it's a higher percentage? Let's say you're risking 10% of a $1,000 account, right? This is $100, $100. If you enter this trade here and price comes into the zone, you've just planned the trade out real simply. If you enter and then it starts to bounce here at this zone, very bad, this first candle broke. So if it starts to bounce at the zone, then you just stay in the trade. And then if it ends up working out, then you make a profit. If you get into this trade, then it starts going sideways and it looks like it's going to break the zone. It's really hard for me to show this here with these candles, so let me just use an arrow. If you get into this trade and it starts to bounce, but then it starts looking like it's making lower highs and it looks like it's going to be breaking through the zone, then it does break through the zone, you can close the trade right there, and that's what, like a little less than halfway to your stop loss. So if you risked $100, maybe you lose this trade at like $40 or $50 of loss instead of $100. That's controlling risk. You're defining how much you're risking per trade. You're using a very simple way to structure the trade, like a 1-to-1 risk-reward ratio, just to plan the risk structure, just to give yourself a way to get in, say there's my maximum loss, my maximum risk right there. And at worst, it's a break-even system because you're probably going to win 50% of the trades. You're probably going to lose 50% of the trades. So like, while I'm not giving you financial advice and I'm not guaranteeing you anything at all, and you shouldn't listen to me because I'm not a financial services provider and trading is risky and most people lose money, I'm just saying, if you have a 50% win rate and then you're risking 1-to-1 and you have a trade where you lose $100, then make $100 and lose $100 and make $100, you're starting out already with just a break-even system if you're just holding the trades to the profit target and stop loss. Now, how you make it profitable? Getting out of the losing trades a little bit earlier and then trying to hold the winning trades to the profit target under the right context. This is all developed with skill. It's all developed with getting experience, using that applied experience to dictate your skill set in trading. That gives you that beautiful intuition, and that intuition provides you the wisdom to decide what to do in the present moment once you're in a trade, watching it play out when you're actively managing it. It's not that complicated. It just takes experience. So keeping things simple and controlling risk. Simplicity dictates that really it shouldn't take you more than 10 seconds to find a trading setup. Let me show you. Like if I was going to go to GBP USD, for example, if price gets here to this resistance zone, I would simply have an alert there. What are we, 5 seconds into this analysis? Then I'll draw a little arrow thing here. And then boom, that's probably been 10 seconds. And this is the whole analysis. Now I'm ready for the trade. Now if it gets there, I'll get an alert. I'll go here. I'll probably go to the 5-minute chart and I'll look to see if it's starting to reject something like this, like right, some pin bars and like a bearish candle. And then if it is in fact rejecting, then I'll just take a sell. The trade will probably look something like this: a sell here at the resistance, stop above, target at a 1-to-1. Not trying to be a hero, not trying to go for the next 1,000 pip move, not trying to show everyone how big my you know what is. Just trying to be the dude that gets a little bounce of the zone and gets out and gets on with his day. If it looks like it's going to break the zone, the candles start closing higher into the zone, and it just feels like it's not going to work. Again, this comes with experience. It comes with you just doing the same simple thing over and over and seeing it happen over and over. If it looks like it's not going to work, I get out at a small loss. Worst case scenario, it hits my stop loss, and the risk is predefined, so it is something I'm comfortable with regardless. Best case scenario, which happens at least half the time, it just bounces to the profit target. And then like we're barely doing any, like doing what, 10 seconds of analysis, maybe another like 30 seconds to calculate the risk using the position size calculator tool, and then like another 30 seconds to enter. You're maybe in about a minute of work, maybe. Once you get the flow of it, once you get used to doing it over and over, it's not rocket science. It's just like the same stuff over and over and over. Then you check back once every few hours, look and see how the candles are closing, if it's working out or not. It's just the same old stuff over and over. So that's that. So we've talked in this video so far about the uncertainty in trading and how you just have to accept it. We've also talked about the importance of keeping things simple and controlling risk. And this last thing I'm going to touch on is fear. And then I don't even need to show you the charts to do this. I'm just going to talk to you human style, face to face. When it comes to fear in trading and fear in life in general, you've probably noticed that you make a lot significantly shittier decisions whenever you operate out of an emotional, fear-based perspective. To get yourself into this perspective where you are in fact fearless, you have to first start out on a demo account. It's wise to do that. It's a stupid, dumbass thing to do to trade on a live account when you've demonstrated no actual profitability ever before in your life. It's just a very stupid thing to do. So you start on a demo account, you learn, you get the skill set, you develop it over the course of a couple months. After you get profitable in demo, because you're betting on price going up or down, trying to make a little bit more than you lose. After you do that for like 3 to 6 months, sometimes 12 months, the people who get profitable generally get profitable in about a year or two from what I've seen. It took me almost 2 years to get profitable. Again, I don't consider myself to be that smart of a person. I actually consider myself to be kind of stupid when it comes to certain things because I kept on doing a bunch of crazy shit that obviously wasn't working. I wasn't keeping track of what I was doing. Literally nothing. Nothing. I was such a fucking idiot. Wasted so much time. Anyway, with that being said, I was still able to make it work out because I finally realized, oh shit, all that matters is that price is going to go up or down. I just got to make a little bit more when I'm right versus when I'm wrong. That's it. Not that big of a deal. So if you're doing this and it takes you, let's say, a year to get profitable in demo, maybe 6 months to a year, who knows, right? Could take you shorter, could take you longer. Once you do get profitable in demo, move to a small live account and risk a microscopic, hilariously small amount of money per trade. Say you start like a $100 account. Risk like $5 per trade, like as low as you'll be able to do with the with the minimum lot size you have to use and with the pips of the distance to the stop loss or whatever. Maybe you're risking $5 to $10 per trade. That way you legit just don't care what happens. If you're still scared, go back to a demo account. If you're scared of risking $5 on a trade, I don't know what to tell you. Go back to a demo account. And so risk that small amount per trade and then let yourself trade normally. As you continue to get profitable and stay profitable on a small live account, say after a month you've been profitable trading, you've grown a $100 account to like maybe $150 or something. So then start risking a little bit more. You know, instead of $5 risk per trade, risk $10 per trade. Then once you start doing well on that for another month or so, go risk a little bit more, maybe like $20 per trade. Put a little bit more into the account. This is how you slowly start to scale up. So that way you don't get hit with the shock of like, wow, okay, I was doing this on a demo $50,000 account. And now I was profitable for like 3 weeks doing that in demo, only 3 weeks. And then I switched to a live account. And then now you're trading like, now you're risking $2,000 per trade on a $50,000 account. And you're like, whoa, this shit is like, this is pretty crazy. I entered a trade and then in like 15 minutes it hit my stop loss and I lost $2,000. And if that's never happened to you before, it's going to fuck you up mentally. You're not going to be thinking straight for the next trade, especially if you start taking a losing streak of 2 to 3 trades. That's when you start questioning reality. That's when you start thinking this delusional shit like the market's out against you and your broker can see your stop losses and then they're trying to manipulate the market to hit your stop losses. You start thinking all of this obscene shit, but none of it's real. The objective reality is that price is a neutral thing. It's just the fucking candlesticks on the chart that move up or down. It does not give a shit about you. Nobody really cares about you. I'm sorry. It's just price going up or down. All that matters is how you react to what that does and how you manage what happens as price action develops. And so you have to do this from a place of zero fear and emotion, which is why you should be trading on a demo account first. Get the experience. Even if you don't have like a rigid black and white system, you don't need one. All you need to do is just get the experience seeing the same old stuff over and over again while having a very simple set of ground rules for like, okay, in general, I'm going to wait for price to get to a clear support or resistance zone. And then in general, I'm going to buy at support and then sell at resistance. And in general, I'm going to have a 1-to-1 risk reward ratio. And in general, I'm going to kind of watch price unfold and try to get out early if it looks like it's not going to work. And then try to stay in if I think it is going to work. If you just do this over and over and over and over and over, it gets to the point where it's almost like talking to a tree. It's really, really boring. Like you're just going through the same motions over and over again. That's what it is. That's what trading should be, in my opinion, if you're doing it right. It's just this very nihilistic, dull, flat, emotionless thing where you're like, okay, if I do this, then the end result is that I make profits long term. Like every year you should come out and profit. I average about maybe like 2 to 3 break even or down months per year, every year, with the exception of 2022. This year in 2023, we're in September, and I have had 2 months this year where I've lost money, and all the rest of them have been profitable. So it's like what, like it's like 9 months out of the year. So 7 months have been profitable, and 2 months I've lost money this year. And I always make more on my winning streaks than I lose on my losing streaks. Again, I'm not a god trading. I'm profitable, and I have been profitable for almost 5 years now. Sorry, 6 years, almost 6 years now, because it started in 2016 in March, and we're in like 2023 now. So however long it's been, right? So it's been like pretty much 6 years I've been trading profitably. Same shit happens over and over and over and over and over again. To recap real quick, you have to accept that trading is completely unpredictable. There's so much shit that can happen. There's so much uncertainty. That's the first thing. Just accept it. It's cool. You don't have to win every single trade to make profitable. The outcome of the next winning trade or the direction the next trade you take moves has zero to do with long-term profitability on a grand scale. That's the first thing. Second thing, I suggest keeping things simple and controlling risk. It allows you to do the same simple thing over and over, and controlling risk means you're never going to have a huge loss that you're not comfortable with. If you define what you're comfortable risking and you have a very simple approach to entering and executing trades, like for example, something as stupid as buying at support and selling at resistance, something I've been doing for like almost 6 years profitably. If you're doing something like that, keeping things simple and controlling risk is great. And the last thing is you have to be fearless. You have to be delusionally confident. And you only get this trading from a place of no fear is if you're trading with what you're comfortable with. Starting on a demo, then a small live account after you've been profitable in demo, and then continuing throughout your trading career, slowly scaling things up. When I was having great winning weeks in 2018, I would be killing it. I'd be taking all these trades, making so much money, and end the week having made like $400 and feeling very proud of myself. Because at that time, $400 was like how much I would make at my full-time job that I'd worked in 2016 and 2017. I was making like $1,600 a month working at Target, and there was like assets protection, so like a loss prevention security type thing. Like that's crazy. You know, I was making like $10 an hour, so it was actually technically less after taxes. I was making less than $400 a week. Absolutely insane. So for trading, I felt like a god doing that, right? Now, $400 a week for me now probably wouldn't be enough to support myself because my lifestyle's changed a little bit as I've gotten more money, but it's scaled up to the point where I've had some weeks where I make $20,000 to $30,000. The month of July, I made $82,000, counting like Forex, stocks, and crypto. And by the way, I call all my trades out in Telegram. You can go look at all my analysis there. All my stock trades, I call those out for free. I trade stocks part-time and make an extra 10, 20, 30K a month just from stocks. Forex is my bread and butter. So in the month of July, I made like $82,000 just trading various financial markets. And then in the month of August, last month, I lost $10,000 last month. 10 grand. I traded the whole month. I came to bat every day, came to work, lost 10 grand. Again, when I have profitable months, I always make more. Well, pretty much almost always. I almost always make more during my profitable months than what I lose on my losing months and periods of losing streaks. Almost every month is profitable for me throughout the year. But again, and I average 2 to 3 break even or down months per year. Just a part of the game. That seems to have been the case for most of my trading career, with the exception of 2022, where every single month was profitable. But that's a big outlier in my opinion. That was not a normal year for me. For some reason, everything just happened to work out really well. I don't really know. All I know is I'm going to keep things simple and keep controlling risk and trade fearlessly and accept uncertainty. So I think if you do these things, which is accepting uncertainty and accepting that you don't know when or if you're going to get profitable, and you just take that stress off your shoulders, just accept it's all uncertain. If you keep things simple and control risk, and then if you learn to trade fearlessly by structuring your trading approach as in the way that I described in this video, with keeping things small, a demo account, small live account, and slowly transitioning up, this allows you to trade naturally. It allows you to trade organically. It allows you to use your experience and intuition and discretion. And then trading doesn't have to be this daunting, crazy, wild thing where you're looking at all these millionaire trading gurus on YouTube, wondering how the hell they do it, thinking to yourself, man, I wish I could just do this in like a very simple way where it's not a pain in the ass and it's not so complicated and I don't feel this feeling of anxiety every time I log onto my damn computer to look at a chart. And it's almost like you resent trading, this thing that's supposed to like bring you freedom and money and all this shit. You end up resenting it and then feeling like shit. And of course, that's not going to help you get profitable. As if you don't even like what you're doing, of course, it's not going to get profitable. No wonder you're not profitable. If trading is this daunting thing that makes you scared or just have some form of discursive thoughts and emotions every time you look at a chart, of course, it's not going to work if that's the case. You have to sit the fuck back and relax and just say like, look, everything's uncertain. I don't know what's going to happen. I'm just going to keep things simple and control risk. And then I'm going to learn to trade fearlessly by building that habit of trading in demo, seeing what happens, doing more of what works, less of what doesn't, just gaining that experience over time. Hope this video was helpful. If you like this video, do whatever the hell you want. Maybe join my Telegram channel for free. It's the first link in the description of this video. Cheers. See ya.